Japan is crumbling, and the shockwaves might just collapse the global economy. For decades, Japan was the world's economic powerhouse, quietly funding the planet's ambitions. But today, the once reliable giant is faltering, and what happens next could shake Wall Street, Silicon Valley, and even your local grocery store. For nearly 50 years, Japan was the world's piggy bank. It pumped trillions into global markets, buying US Treasury bonds, investing in tech stocks, even funding infrastructure in countries like India and Australia. But now that piggy bank is almost empty. Japan's debt has skyrocketed to a staggering 260% of its GDP, twice the level of the United States and far worse than Greece during its crisis. And it gets worse. In 2024, just over 720,000 babies were born in Japan, but over 1.6 million people died. That means for every baby born, 2 people died. Japan is literally running out of people. Its population has shrunk from 128 million in 2010 to around 123 million today. By 2050, it could fall below 105 million, or even 87 million. Back in the 90s, there were 5 workers for every retiree. Today, just 1.8. That means each young worker is carrying a heavier tax burden and saving less for their own future. Economists call it Japan's Mount Fuji of debt, a towering crisis decades in the making. In the 1980s, Japan was unstoppable. Real estate prices soared. The Tokyo Stock Exchange was on fire. The land around the Imperial Palace was worth more than all the property in California. Then, the bubble burst. Stocks crashed, real estate collapsed, and Japan entered what's now known as the lost decades. To stop the bleeding, the government spent like never before, stimulus after stimulus. Earthquake recovery, recession bailouts, pandemic aid, and every time, they paid with more debt. How did Japan survive this long? 2 words: quantitative easing. The Bank of Japan printed new money and used it to buy government bonds. Today, it owns over 50% of Japan's entire national debt. With the BOJ acting as the buyer of last resort, interest rates stayed low. Japan could borrow cheaply, even when its debt was twice the size of its economy. Then came yield curve control. The Bank of Japan didn't just touch short-term rates, it even controlled long-term ones. Imagine borrowing money for 10 years, almost for free. Cheap Japanese money spilled across the globe, into US stocks, into European bonds, into risky corporate debt in emerging markets. The entire world got addicted to Japan's liquidity. But now, the pressure is building. Inflation is rising. Interest rates worldwide are climbing. And if Japan has to raise its rates even slightly, that pressure cooker could explode. If Japan falters, its debt implodes, its people age faster than its economy grows, the global dominoes may begin to fall. Wall Street, Frankfurt, Shanghai, no market is safe. Japan's economy isn't just about Japan anymore. The question is, when the world's piggy bank finally runs dry, who pays the price?